The next session is going to be very exciting, and I was just discussing with my esteemed panelists. This wouldn't happen. This wouldn't be possible actually if we had it 2 years ago. All of you know, right, that we were supposed to have the Seoul Conference actually in 2020, right? Because of the pandemic, we had to, move it to 2022. If we had it at 2020, it wouldn't be possible. Okay, so what does it mean? It means that actually last 2 years, a lot of things have happened in both Japan and Korea. And so today, we are going to talk about shareholders activism. And before I introduce my very esteemed speakers, I'm going to show you this slide. Okay, so this really shows how difficult it is in Korea and in Japan, right, for shareholders activism. You are really up against the giant. This is David and Goliath, of course, And because, as all of you know, it's basically concentrated shareholdings here. The government is it's not strong, but the chaebols, the companies are all very strong. Okay, the controllers are all very strong. So how do you actually develop? How do you even put up, shareholders proposals and do things for shareholders? And we're going to listen from three of the speakers. Let's see. I'm going to go back. Okay, so I'm going to introduce my speakers. The first speaker is, for those who are in Korea, you would know him actually. Right? He's almost like the hero of shareholders activism. Okay. For those who are following K-pop, I'll let him know, tell you more about it. But if you are following K-pop, I'm sure all of you have heard of BTS, right? Okay, BTS and Super Junior, right? Super Junior. So Super Junior was actually run by SM Entertainment, right? So it's one of the biggest listed entertainment group. And Mr. Lee Changhwan almost single-handedly, right, made changes to the company. Right, I'll let him tell you more about it, but it's actually one of the biggest things that happened and just ended in March this year. Right, the whole saga. Okay, it's a whole year-long saga and just ended. And then after Mr. Lee Changhua from Alliance Partners, Mr. Lee Changhua, of course, I'll introduce you a little bit more. He was a graduate from the Seoul National, and before he started his own hedge fund company called Alliance Partners, he was actually with KKR. Okay, he was actually with KKR, and even before KKR, he was actually in the investment banking division of Goldman Sachs. So he was actually earning a lot of money, but he decided that maybe it's time to actually do something. So he started his own hedge fund in 2021. All right, that's why I told you this wouldn't happen if we had our conference in 2020. So he started his hedge fund in 2021. All right, so I'll let him talk a little bit more. And after Mr. Lee, we have Miss Christine Tang. Miss Christine Tang is one of the partners of MBK. MBK, for those who are in Asia, would know that it's the biggest, I think it's one of the biggest, if not the biggest, private equity fund in Asia. Right? It's indigenous. It's not controlled by any of the big black bloc or anything. It's actually indigenous. It's one of the biggest PE in Asia. And Miss Christine Tang is also an alumni of Seoul National, and she has a JD from Columbia University Law School, right? And the third speaker that we have is Mr. Eijiro Imai, and he's the managing director of Farallon Capital in Tokyo, all right? And he now sits on the board of Toshiba. Okay, for those I think I shouldn't talk anymore. All right. Yes. So I'm going to. Anyway, he sits on the board of Toshiba, and those who actually do cases on Toshiba scandals and all that kind of thing. So he currently sits on Toshiba, and as you know, Toshiba just this year they decided that they will sell it out to a PE. Right? They had lots of proposal after the scandal how to pick themselves up. Right? So he sits on the board, and he made some, of course, contribution and as well. So I'm going to pass the time to my guests and let them tell you shareholders activism in both Korea and Japan. All right? Okay, let's put our hands together.
Thank you. It's my honor to be here and given a chance to speak. And thanks for the introduction. Yeah, so I think the case of SM Entertainment, I think it's really the first case study of activism in Korea where the activists got exactly what they demanded. Typically, there were some attempts by like a foreign activist funds or even some local activist funds, but typically they settle somewhere like, for example, just give up a little bit more of a dividend or maybe a bit more of a share buyback. But here we exactly achieved what we wanted. So let me give you some background. So SM Entertainment is one of the top 4 agencies for K-pop bands and boy bands and girl bands in Korea. Market cap, when we initially invested, it was about $500 million in 2021. That was in the middle of COVID. So because of entertainment, because of the COVID, the singers couldn't hold concerts. So the performance was bad, and they were going through tax investigation. So they were actually reporting negative earnings. So we did see the uptick in terms of global surge of the fandom for the K-pop boy band and girl bands, led by BTS, but other K-pop boy bands. There was some trickle down, I think, effect, and also the YouTube. We thought we compared the valuation of those companies, and then we realized SM is super undervalued compared to others. For example, there was a PR company called JYP. They were trading at about 20 times EBIT. Hive was trading at about 50 times EBIT, but then SM was trading at about 6 times EBIT. So it was super discounted. And everybody in Korea knew why, because SM, maybe they are very good in terms of their, their singers are famous, they maybe make a lot of revenue. But the founder, SM Lee, his name is SM. So he had very bad reputation in terms of taking money out of the company. So he owned 19% stake in the company. The company got public in 2000, but they never paid any dividend until 2022 when we launched the campaign. So before that, the company made a lot of money, but they never returned to the shareholders. Instead, the founder, he appointed 4 directors of his relatives or his college friends, high school friends. And then what he did is he entered into a contract with the company to take 6% of revenue, or roughly 30-40% of operating profit, as royalty for using his expertise in producing this type of boy bands and girl bands. But none of the other top 4 agencies did that. So it wasn't me actually who first raised this issue. There was another, it was because it was just disclosed, but there was another institutional investor called KBSM Management. They actually sent a public shareholder letter in 2019, but the company simply declined, saying that this is very critical that we get advice from Mr. Lee. It's worth the money, so you don't know the industry. So that was the answer. So that was why the Eijiro, the financial district of Korea, had a lot of anger and frustration about the situation. But in Korea, it's really difficult to make any sort of a change as a shareholder, especially for the case of KBSM Management. They are owned 100% by KB Bank. This is the largest bank in Korea, so they're not independent. And there are many stakeholders associated. So based on what I hear, there were some other influences from outside, so they couldn't proceed further at the time. For me, it's 100% owned by me, and I can make independent decisions. So what I did is that maybe we can make a change. It's difficult to make a lawsuit as a shareholder because it's difficult to gather proofs. In Korea, there's no discovery, so you have to make a lawsuit as a shareholder. You have to gather proof, but there's no way you can gather proof. So basically, you cannot do anything. But there's one way that allows you to do something, which is the 3% rule in the commercial code, where in appointment of an auditor to sit in the board, the voting right of any shareholder is kept at 3%. So that's when maybe, okay, because to me, this is clearly illegal, like the founder is taking money out of the company. So maybe we can run a campaign to appoint an auditor. Maybe we have a chance to win because it's clear a case for change. and there are a lot of anger in the street. So in February last year, we did sent a public shareholder letter to ask the company to terminate the contract. Obviously, they declined it. And then with that as a reason, we made a proposal to fight at the AGM last year. We only owned 0.9% at that time, but the other shareholders supported us, and then we actually were able to win the AGM. We won about 33%, and the founder, including his 19% stake, only got 23%. So by 10% point, National Pension supported us, 95% of institutional investors supported us. So we were actually very shocked as well, because we think this is really kind of the combination of everything. The Swedish code that Korea adopted since 2016-17, so institutional investors actually voted in for the interest of their fiduciary, which is obvious, but they were doing that before. So, and then national pension. So, and then what happened is that we were able to actually fix the issue with the auditor, because the founder and the management never expected something like this can happen in Korea. So when our auditor started to investigate the situation, he was able to find a lot of things, like even beyond expectations. They had a winery in Napa Valley with the company money that the founder uses. It's a wine called the Imos. You can try it when you go to West Coast. And they had a condo in Hawaii. A lot of things we found. So we had a lot of actually leverage them. So we in August, after some investigation, we sent another round of public shareholder letter. This time we gave them 1 month, saying, okay, if you don't terminate the contract within a month, we will start take legal actions. And what happened is that at the end of that 1 month period, they announced that they would terminate the contract. On that day, the share price, on the single day, share price went up by 20%. So that was the first stage of our work, which was, we were very happy that actually that happened. But then we didn't stop, because as we investigated, as I said, we found a lot more things. So we thought that maybe not it's just the contract issue, maybe there are more things to do. We thought that actually the corporate governance structure itself, we need to change it. So what we did is that we went on to ask for their board minutes, accounting books, and then spent about 2 months with the lawyers and accountants to put together a book of 64 pages, and then listing out all of the findings, and instead demanded 12 things, 8 demands and 4 suggestions. And this is the summary of the agreement that we had with the management. So we were continuing to push them, saying, if you don't accept our offers, proposals, we will take legal actions. And actually, we actually took some actions. We filed for the shareholder lawsuit, and also we told them that we may disclose some of the findings. And ultimately, the board decided to cut a deal. So this is the summary of agreement, which is they accepted all of the things. The biggest thing is they agreed to change the board structure. So originally there were 4 board directors who were all relatives or friends or of the founder. We let them keep 3 of the internal directors who agreed to do a deal with us, the CEOs, and but then the remaining 4, we agreed to appoint 4 independent directors who is really independent from the founder, and they accept me as the board director to drive the changes that we agreed. And we incorporate many changes in the Articles of Incorporation to make these changes permanent. So I think this is probably the best Articles of Incorporation that any Korean listed company can have. Yeah, so, and we didn't stop there. We actually agreed to change the company business operation, because the company was losing their market share, because the founder was 72 years old. But he was in charge of all creative decisions for producing teenager music, right? But for other competitors, they had multiple producers who is young and upcoming, who make creative, trendy decisions. So we were losing. So we decided to make a change to transition into multi-director, multi-producer system where young and upcoming, energetic, more trendy producers can have opportunity. So that's number 3. Yeah. So. That's it. That was the summary, the very long summary of the work we did. I mean, there's more beyond what happened beyond that was actually nothing I planned. I think, but there are some takeaways because the way Korean commercial code is structured is that whoever the controlling shareholder can do everything they want. So as long as you have 30%, for example, you appoint all of the directors and you can do whatever you want. You can take everything from the company basically. So when the founder was kicked out, I hope that the company stay independent and work for the entire shareholder. But then, some of the strategics, they actually want to acquire control and take strategic benefits from the company. So we had to make many, we were kind of thrown into the situation. So we had to desperately find a way to protect the best interest of the shareholders. It's not like what ultimately happened is that the Kakao is like a WhatsApp or like a WeChat of Korea. They acquired, win the bid and acquire the controlling stake. They hired the agency of BTS, partner with the founder to hostile takeover. So there was a lot of things happened. So the outcome is, I would say it's 80%, but not 100%. But then I think at least it's probably the best outcome that we could practically choose, but not the ideal outcomes. But I think it's a pretty good case study that I wanted to share.
And I think I last checked, the valuation now is 2.16 billion. So from 500 to now 2.16 billion. Current, is that true?
That's right, yeah. So right now it's about 2.4, 2.3, yeah.
Hi, when I was asked to join this panel, and after I sort of learned about the topic, I was challenged by, what do I speak on? Because the business that I am in, or my firm is in, is quite, it's worlds apart from shareholder activism. It may actually go in opposite directions, but, so I gave it a bit more thought, and I thought, well, maybe it's similar, but just an extreme form of shareholder activism where, right, we take out the shareholders altogether and take over the company. So you could think about it as an extreme form of shareholder activism, maybe. But, I just wanted to just share my thinking through this issue in comparing it with shareholder activist funds, the interaction that there may be between the two types of managers, and also how we're seeing a convergence in the two in the background or the context for that. And the question that Luh Luh posed to me was, how do firms like, MBK Partners, which is where I work, but these more traditional PE firms, how do they, identify and enhance value in companies with poor corporate governance? The question that occurred to me was, I think it was raised before in the discussion, what exactly is corporate governance? It could be very broad or it could be narrow, but in any case, the way that it occurred to me is for shareholder activist funds, they identify these gaps, and when they say value enhancement, I think what it means is the firm's value is lower than where it should be, right? If it had better corporate governance in place. So you're identifying that gap and trying to bring it back to where it should be. But from a more traditional PE buyout perspective, it's a little different, right? I think that gap is what might trigger an interest in taking over that company. It's that gap that may provide the impetus or an opportunity to have that negotiation or start that negotiation with a controlling shareholder or whoever the interested parties may be. But then the ultimate goal is to do value creation. So I think it goes beyond enhancement. If what we're saying enhancement is filling that gap, we need to identify something that goes beyond that, where we could create value, and that goes more to the operations, changing the capital structure, just the overall management of the company. But I do have to say that many of the transactions do come about triggered by events that shareholder activist funds that trigger their interest as well. Some examples, we had a recent transaction where actually an activist fund was involved. The company was undervalued, severely undervalued, because of an accounting or embezzlement scandal within the company. We've had other experiences with companies in other jurisdictions that had accounting scandals, maybe liquidity crunch on the part of the shareholder, the controlling shareholder, for reasons outside of the company itself, but the shareholder, he may have pledged all of his shares in the company for a personal loan, or sometimes, and more commonly I think in Korea, regulatory government pressure to divest businesses. This would go more to the conglomerates, the chaebois. And so all of these factors that trigger a potential transaction. But I think what comes after that, and this is where I see shareholder activist funds and more traditional buyout funds maybe working together or even sequentially, right? These issues that are identified by shareholder activist funds, they may go in and raise or flag the issues. But I think there is some limitation to what activist funds can do. I know that Changhwan has done a lot with SM, even going into operations after the transaction, but that's not typically the case, right? I think what comes after that is for a more traditional PE fund to come in and take over and really turn around the business. And when I say take over, 100% buyout, that may be easy. But in these situations where these triggering events were some events caused by controlling shareholder or certain events there, it may, in a lot of instances, we may have to have the controlling shareholder stay, but be able to do a transaction where we have sufficient control, sufficient influence over the board, such that we can bring about an overhaul of the business. And I think the way that funds like us are able to do that, or would enable us to do that, is really to have a track record in that market. So I think it really comes down to the trust. Trust that the fund or firm has built up in that market, because in order to engage with the controlling shareholder to do a deal where you're asking them to step down, and it's really not an easy conversation, engagement to be had, but sometimes these are forced because of the circumstances that I mentioned before. The controlling shareholder may really be in a bind and have to do something. No, they have to let go. They may not want to let go entirely, but let go substantially their control. And the trick is really in being able to engage with the controlling shareholder, to let them know that you have a plan. You have a plan to really turn the company around, to enhance the value, or to create value, do more than enhancing, create value, and ultimately end up in a win-win situation for all. But to get that across to a controlling shareholder who is in a situation where he or she is forced to let go of the control, you really need to have a trust or reputation that's built up to be able to engage. And I think this kind of relates to the fact that even activist funds, it's the domestic activist funds in Korea that have really surged in activity rather than the foreign activist funds that you're more familiar with. And that's because the foreign activist funds are seen to be taking a very short-term view, just taking the lowest hanging fruits and getting out of there. I think the domestic activist funds, once they started becoming active, are giving different messages, as Changhwan has done with SM. And that garners the trust of the market. They need to be able to trust you with the control that you're being given. And in that sense, I think there's some similarity between the way that activist funds and PE funds have a role in really improving and bringing better governance to the market.
Yeah, thanks, Christie. Initially, I was trying to look for a picture that shows that there's somebody fighting in front, and the other party, the other person that's actually picking up, all the goals. The person that's fighting in front, right? So I think that shows the relationship between shareholders, activists in front. They're fighting, but the PE will reap some of the benefits. Of course, at the end of the day, both will reap benefits, and at the end of the day, of course, the company, the shareholders will reap benefits.
Right.
That's what they do.
In that scenario, as I said, I think that's why I see more opportunities where the two can move together. But for PE firms, that means that it'll drive up prices, and so it's actually not an ideal situation. We need to beat.
So you must work faster, right?
Right?
So I think at the end of the day, from a shareholder's point of view, it is good. Somebody is doing something, right? We don't care whether is it the hedge funds that's doing, or whether is it the PE that's trying to buy up and do something about it. I think something is being done, right? So I guess you're giving the PEs a run for your money, right? Okay, yeah, thanks, Christie.
All right, thank you very much. So I'm going to explain a little bit of the general trend in shareholder activism first, and I'll give you a couple of notable examples. So this is a disclaimer, but you don't have to read it, but it shows you how hedge funds like ours are paying attention to regulation. When I said I do presentation, my lawyer asked me to put it, although nobody did it. So here's some numbers, right? So if you look at the number of companies receiving shareholder proposal from activist funds, it's been increasing, as well as number of proposals itself. And if you look at the types of proposals, the 40% is around like balance sheet, including dividend increase or share buyback. 40% is around governance. I think there are two reasons why activism has been increasing in Japan. First is high HCC cost, and second is positive changes in Japanese equity market. I will explain a little bit more details in each of these points. So when we investor tends to, like just as Christine said, we investor tends to look at the agency cost as a price, the difference between the intrinsic value of a company or business and market share price. If the price is significant, investors can make investment at the lower variation relative to the intrinsic value, be a catalyst by themselves, and make profit. So the significant agency cost means potential investment opportunities. Why agency cost is high for Japanese companies? So I think there are three reasons. First is lack of governance by the outside directors. The second is lack of discipline from capital market. And third is lack of equity-linked compensation. So here are some figures related to each point. So first is 12%. So this is the percentage of listed company with outside directors more than a third of the entire board back in 2015. So 47% is the number of Allegiance shareholders who almost always support the management decision and never vote for the shareholder proposals. So 86% is percentage of base salary plus annual incentive. So this compared to close to 30% in US and 50-60% in Europe. So why? But I think it's been true for Japanese company for quite a while, right? So even though there's significant agency cost, unless you can unlock the value, you cannot make profit. So the question is why it's different now. I think there are three reasons why we can say it's different now. The first is positive development of laws and soft laws. And second is increasing investment by people. So P and hedge fund can work together potentially, and also unsolicited takeover. The last is increasing recognition of necessity of industry consolidation. So here's just a list of laws and soft laws, which I think have contributed to positive changes. And our generous JPX is on the list. I wouldn't get into details, but because of those changes and laws and development of laws, Japanese companies are paying more attention to return on equity, and actually they increased the number of independent directors. And as you can see, I pointed out 12% in 2015 as a percentage of listed company with more than a third independent. Now the number is up to 81%. So there's an increasing number of unsolicited takeover bid, even though it's small, it's increasing as a direction. However, still there's a room for changes. So if you compare the types of tender offer, left-hand side is unsolicited, but the percentage is higher. And offer, the middle is competing offers, and the right-hand side is from competitors. Each of those types of tender offer, if you compare that versus US and UK, still we are far behind. If you look at the ROE trend, Japan is left right, but we're still lagging behind, far behind US and Europe. And as much as 40% of the Japanese listed companies are trading below book value. This is as of this year, May. To address those issues, so recently there are two positive developments. So first is the study group under Betty published a report where they put more emphasis on shareholder return interest, and also they stated best practice to handle bona fide offers from buyers. Usually, the management ignore those offers, but now the best practice is management has to take it to the board for consideration. And lastly, recently, the Tokyo Stock Exchange published a material where they specifically said that the company with valuation less than 1 time book should address it. And surprisingly, there are many and many companies who try to address it in the recent plan and earnings release. So those are the big kind of general trends in shareholders activism. I'll share with you a couple of notable cases. The first is a company called Olympus. This is a market leader in endoscope business. So globally they have 90%, so 70% market share. The company has been trading at the low valuation because of poor governance and also exposure to underperforming camera business. So they are manufacturing digital camera. And Value Act became a large shareholder. CEO was replaced. The company decided to sell its underperforming camera business to a private equity investor, as well as they implemented cost reduction to improve margin for the core business. And the share price tripled since its lows. Another example I share with you is Dai Nippon Printing. So this is the domestic market leader in printing service with some high margin niche material business. The company has been suffering low ROE and PBR because it's significant for shareholdings. Elliott became the largest shareholders end of last year, and this year the company announced a midterm plan where they sell significant cross shareholdings and do the buyback, as well as aggressively invest into high margin business, and share prices at more than 50%. So that's the last example is Toshiba. So as many of you know, Toshiba is a very iconic Japanese company with more than 100 years of history. The company had accounting scandal in 2015, huge losses from nuclear power project in the US through its investment in Westinghouse. The company needed to sell its crown jewel assets, as well as issuing equity to active hedge funds. The CEO promised to turn around the company, but the company couldn't deliver the results, so the company ended up going through strategic review process, considering spin-off and privatization under suggestion by the shareholders. So Toshiba is unique for two reasons. The first is, I think as a listed Japanese company, this is the first case where strategic review committee was formed. And secondly, they appointed me and also another gentleman from area of management as a director, and also a member of the special committee which underwent the strategic review process. Also, nomination agreement within the company and shareholders were even disclosed at the website. This never happened in Japanese companies before. To make it more transparent, the company ended up announcing a deal to be sold, to be privatized under sponsorship with the consortium of Japanese private equity firm and investors. So that's it from me. Thank you very much.
Okay, thank you very much, Eiji. What we're going to do now is just some questions, and also they sort of meet for the first time physically, and they have a lot of questions as well for each other. I think we learn a lot when they ask questions, right? So my first questions to all of you is, what is the role of media? Okay, this is something we talked about during lunch as well. What does media play? Okay, what is the role of media in shareholders activism? Because especially for Korea and also Japan, what do you think? In US, we know that people use proxy fight, spend a lot of money on proxy fight, and use television, use TV, and use advertisement and all that kind of thing. What about in Asia, in Korea and Japan?
Maybe I can take that question first. So I think the role of media in activism in Korea is really, really important, because Korea, I think the social, economic, I think the structure is dominated by those few chaebol families. So back in 2015, when Elliott tried to do something against Samsung, they were smashed by all of the medias united in Korea, because all of the media, they survive, traditional media, they survive by ad money from who. So I think that if I were if I launched this campaign in 2015, I wouldn't be able to be successful. But now it's possible because of the new media, like YouTube and the other the SNS, which is not, and also the emergence of the young generations who actually have access to information outside. So we could play a lot of active media campaign through these new form of media, and that actually, because especially the companies like SM, they are very sensitive to how fans think about the company. So that was why the campaign was very effective, I think, media campaign.
Yeah, I think in Japan also its media strategy is important, but I think media narrative tends to be controlled by large Japanese companies. So it's difficult to get the gain from media coverage. It's more about defensive play. You don't want media to saying something bad about the campaign. And I think the only way to do so is having kind of right approach, right proposal, have righteousness in your proposal itself. If your proposal itself to everybody is right, I think it's really hard to have a bad picture on it. So I think that's the approach I think every activist is doing.
I agree with Changhwan that media plays a big role in Korea, especially with all of the internet media. But I think that also creates excess costs to these campaigns, both in attacking and defending. I have a personal opinion that public opinion matters too much in Korea. People are very much swayed in a direction by public opinion, which may not be, which may not always be on a well-informed basis. So, but I mean, given that, I agree that communications strategy is critical in this market.
So I think I think it depends on how much retail investors are, shareholders. If you retail investors are only a small portion of the shareholders, I think what's important is more about engaging with ISS and grassroots and getting recommendation from those institutions. So it really depends on the mixture of your shareholders.
I think in Japan, the institutional investors play a bigger part, right? I think in Korea, it's still the retail investors. Do you think the retail investors play a bigger part, or the institutional investors play a big part?
There is no meaningful institutional investors in Korean typically shareholder base of Korean companies, except for national pension. So in Korea, basically the institutional loan investors are distinct. They are gone. There's nobody. It's just typically foreign institutional investors. But most of them are like maybe passive or like a long-term institutional pensions, but no active long investors. So there are many retail investors, but it's a challenge because retail investors don't vote. So it's a little bit complicated in Korea.
Okay, so that's a little bit of difference between Japan and maybe Korea market. Okay, my next question before I put it to the floor is, what do you think is the present obstacle, okay, in terms of law, okay, for shareholders activism? I'm sure, yes, the last 2 years a lot of things have changed, but I think that there are still on your wish list that the law can change, right?
I think we have a pretty good law and soft laws in place. So we are having almost annual meeting with FSA commissioner, and he always, whenever we have meeting with him, he kind of encourages us to be more active. You guys have a rule, so please be active and make it happen. So in terms of like law and software, I think we are in good shape, and it's really up to each shareholder.
Yeah, for Korea, actually, there are a lot of room for improvement. There are many. So the biggest, I think, is the duty of directors. So by the Supreme Court case created by Samsung, that it's now the understanding is that the directors are not liable for any decisions that damage the shareholder value, as long as that doesn't create any monetary damage to the company itself. So, for example, agreeing to a merger that values the share price at a very low price, directors are not liable. That was the case of Samsung C&T and JL Industries merger, or the spin-off of LG Energy Solution from LG Chemical that probably lowered the share price by 40%, but the shareholders cannot sue the directors. So this one is currently very active. What's encouraging is that it's currently very actively discussed at the National Assembly, and even the Minister of Law is now discussing to see if they can change. So now the Korean law has that directors actually are also owe the duty to the shareholders as well, and the attempts to change maybe the Supreme Court case. Also, as I mentioned briefly, it's really difficult for the shareholders to somehow get protected by the court. So it's very difficult to make a lawsuit because you cannot get the proof, and the class action is almost the law is there, but it's almost impossible to do it in Korea. So many improvement is required in Korean commercial code and other regulations.
Okay. All right. Okay. I'll open to the floor. Yes. Uma Khan. Okay. So, of course.
Yeah, maybe Martin first. Martin, and then Jennifer, and then after
Thank you. So this is a question that kind of covers both Japan and Korea. So the one question is, in the US, a lot of the defenses that were initially used for like takeovers are now being used for activism cases as well. And we've been reading some material that, for example, in Korea, historically, treasury shares have been used for takeover defenses. Professor Rowe has written about this, and we read about that. And in Japan, there's pre-rights warning plan, which Dan, my colleague, has written about as well. So are those which were historically used for takeovers now being used for activism, and how are you kind of navigating through those?
Yeah, so Japan is always following what happened to US with a couple of years lag. So actually, the poison pill targeting at activism is directly happening. They are lowering the threshold as well as they define the on-third party definition arbitrarily to make it better for the company. I think it's to be seen litigated by the court. And I'm not expert, but there's one really bad example where court said okay for the company to use it, but the investors are really shaky investors. So I don't think that applies to generous or genuine financial investing companies. But I think I'm expecting some of the case will be litigated in the court and will make a judgment. But I think companies really trying to introduce poison pill for the purpose of defending against activism. Yes.
So the question was whether activists are using tender offer as the tool or poison pill. Can you repeat the question?
So the question is, are companies using defensive mechanisms that were earlier used for takeovers to protect against activism?
Okay. Yeah. So I think the funny thing about Korea is that there was not much attempt for takeover. Yeah. So we don't. It's almost impossible to do like a takeover in Korea. That's why the average PBR cost is below 1 times. But the Korean companies are also using treasury shares. They can, by board decision, they can buy a lot of treasury shares from market, and they can sell it to their friendly white knights. Or they have typically rooms for issuing the new equity or convertibles to the friendly shareholders without any shareholder consent. So and so they do use these type of mechanisms. But I think that recently, although if the activism or some of the disputes are ongoing, there's a risk that if they use this type of tactic, selling treasury shares to somebody or issuing new equity, then the court may say that you cannot do that. There were some cases recently, but they do use it, but there's some risk for legal rejection.
Yes, I can't resist, of course, asking a question about Toshiba. So we know the company nearly went bankrupt and the shareholder base was replaced. Traditional shareholders, the more conservative shareholders were replaced actually by risk-loving, mostly hedge funds. So then, that was the situation, and then it took forever. So why was it so difficult at Toshiba, given that the decks were stacked so much in favor of the hedge fund activists?
Yeah, I think I wish I knew that it's not going to take this much time. But I think the answer is, after the active managers took large position of the company, they basically brought in new outside directors, hoping the company will improve under their directorship. You have to wait 1-2 years until you see the result, and the company didn't deliver. So I think that's you have to give them a benefit of doubt, especially if there are directors among the large shareholders kind of requested the company to have. So in hindsight, maybe the shareholders should have put the real shareholders on the board sooner than later. But I guess still there is not a perfect alignment of interest between somehow who is working for the shareholders versus the shareholders. So agent 60 cost is really, really complex to solve. And that's why I think it's one of the reasons why it took time. I think after you get on the board, you realize how complex the business and situation is. So maybe, I don't know, objectively speaking, the company needed this much kind of time to come up with the right plan for the future.
Oh, okay, because the mic is there. Yeah, but Jennifer comes back.
It's a question for Alan. So you left KKR, and how do you scale? Where do you get capital? Who do you raise capital from? How much your domestic investors are interested in investing in your fund?
Thanks. It's a very good question, actually. So right now we manage about $200 million, so we're not that big. Right now it's 100% domestic money. As you know, the challenge here in this strategy is that because of the potential sensitive PR issue, large institutional investors, it's difficult to deploy capital to this type of strategy, especially, for example, the national pension, for example. So we're trying to find a way to convince them to put in some money, but that's from the get-go. I expected this, so I'm flying to the U.S. next Monday. So our plan is to raise money from institutional U.S., for example, the university endowments and also the pension funds. We're meeting many of your university pension endowments already. I'm busy in Boston, but anyway. So these more progressive, advanced, sophisticated investors are out there, and I'm very excited that actually success of Japan, the activists in Japan are very successful, and this is actually giving a lot of tailwind to us. So we think our plan is to scale by raising money from institutional investors outside of Korea.
My question follows on from that, and you may have partly answered it. I'm fascinated by the differences between Japan and Korea in the government's attitude to foreign institutional investors. And I recall, and Consik can tell me if I've totally misinterpreted what he said, but in a paper a few years ago, Consik, you talked about a 2007 law in Korea which made it a criminal offence to have an undue influence on a corporation if you were a foreign investor, including requesting more dividends. Whereas the Japanese government, was trying to, with Abenomics, actually use foreign investment to kickstart, managers to take greater risks. So there's that aspect, but the other aspect that interests me is the relative level of power of the business community and whether that has waned. Because I do remember you talked about the Korean Stewardship Code, and when that was first introduced in Korea, my recollection is that it was going to be a government written code, and that it was basically closed down by the business community, and later it was reinvented as a private code. And then my recollection in Japan, and again Goto has written on this as well, that it was really scaled down as a result of the Japanese business community having very strong pushback on making it too strong in terms of activism. So I just wondered if you could say, how have the relative power of the different players changed over the last decade or so?
Yeah, maybe I can take the question first. So I have a slide here. One of the reasons why I decided to resign from KKR to set up a line is the shift of power in the society. So previously, the Korean government was very pro the business community, and business community really strong. And more importantly, the power of business community was very concentrated to basically 5 families, right, in Korea. So they account for maybe more than 50% of GDP. So it's pretty unique, probably, from an even global perspective, right? But what happened? So I was very frustrated. It's never gonna work in Korea. But then after COVID, what happened is that there was a Korean version of Robin Hood movement. So because Koreans learned that after the dip, the market returned. So at the Asian financial crisis in 1997 and also 2008, lots of Koreans flew into the stock market to buy the dip in 2020. So if you can see, the number of Koreans who invest in Korean stock market grew from 6 million people in 2019 to 14 million in 2021. So right now the number is a little bit higher than that. And that changed everything. So these are all voters. And this accounts for more than 33% of voting population. So what was really shocking to me is that there was this YouTube channel. It's very popular to the shareholders, stock investors in Korea. Two of the presidential candidates last year showed up and spent 1 hour each to just talk about capital market policies and how they will improve the Korea discount and capital market regulation. And actually, they still, because the landscape persists, and there's upcoming National Assembly, national election next year, we are seeing a lot of positive movements by government. So they are adopting the mandatory tender offer. For example, in Korea, there was no mandatory, it was the only market in the world there was no mandatory tender offer. So although it's a little bit, imperfect what they're trying to do, but they're trying to do something. The reason why there was no takeover attempts in Korea was that doing tender offer in Korea was almost impossible because you have to put in the entire tender process into escrow account without knowing whether tender will be successful or not. So now, finally, they announced that they will substitute that with a letter of commitment from a reputable financial institution. So you will see more of the. So NBK's, attempt to tender outstanding plant was, they didn't have to put in money in cash, but substituting with the letter of commitment.
We actually did put it in cash.
Yeah. Partially, right? Partially, yeah. I think it's 30% or something. But initially it was like 100%. And also, finally, the emergence of new media. So there's a rapid shift in power happening in Korea. And that's really the driving what's happening in Korea right now.
So, in case of Japan, I think less driven by retail investors. I wouldn't say it's driven by institutional investors' attitude either. I think what changed over the last couple of years, especially versus there's a rising moment for Japanese activism more than 10 years ago. Steel Partners and Murakami Fund was there, but what they were saying back then was really, give us cash back, sell assets, and pay dividend share buyback. But right now, the more activists are making proposal which is more sophisticated and more linked to better governance and increasing, shareholder corporate value as well as the shareholders value. So even though the attitude by the institutional investors stay the same, the increasing number of proposals, even those institutional investors think they have to say yes for the proposal. So I think that what changes is more about the content and the way activists are engaging with the company versus the attitude of the investors.
Yes, this question goes to Christie, Tang. So you made a very interesting comparison between private equity and activist hedge funds. And you also mentioned how difficult it is to convince the controlling shareholder to step down. Now with activists, maybe there's a much favorable environment because they're going ahead and trying to just force the controlling shareholders to step down, which means that they're doing partly the job that you had to do, and all you have to do is just come along. Of course, there's a side effect because they will bump up the share price, so the valuation is not good. That's the downside, but the upside is you don't have to really convince the controlling shareholders to step down because they're at the verge of losing their job. So do you see more opportunities than do you see more opportunities?
Yeah, I think that's exactly the situation that I was describing before, where it may be these events, events that are spurred by these activist funds, issues that are flagged, that can create the impetus for the control for funds or buyout funds to come in and have these discussions or engage with the controlling shareholders. And as I said, those situations, taking a step back, then are many times triggered by bad governance or some problems within the company. So I think that goes to my point where I think these activist movements can open up more opportunities for traditional PE types to go in and take over.
Last question. All right.
I had a really different question. I'm really interested in your personal career trajectory, so I wanted to ask about human capital going into PE and hedge funds in both countries, whether this is becoming the sort of career choice for young people coming out of this place and others, and how's it going?
Not becoming lawyers anymore.
So I started my career as a lawyer, and then transitioned to private equity and then hedge funds. So when I joined private equity 15 years ago, no one, I think everybody around me didn't understand what I'm doing it. 15 years past forward, private equity now is really attractive industry for lots of young professionals, bankers and consultants. My hope is, hedge funds will be like that in 10 years. But I think it's really up to what we are doing. As long as what we are doing is right and benefit not only investors but also companies and society as a whole, I think that will attract lots of talent. So my goal is doing it in the next 10 years.
Yeah, that's a very good question. So I think in Korea's situation, I don't know, Christie may have different view, but I think the private equity shareholder activism is a little bit different stage. I think private equity is, pretty mature. So I think it's still a very attractive job, but the Korea market is relatively small. So I think, and the market landscape is already set. So I think I would say there was a time when the private equity and investment banking was a very, very, very attractive job. And then relatively now a little bit less, still attractive. But then the mindset of some of the junior talents are a little bit different, that maybe there's ceiling how much they can go. But because the market growth slowed down. But then I think the reason why activism is possible and the capital market is now more advanced is that because of this private equity market industry was grown and mature, those high-paying financial jobs were existed for a long time enough to have enough talent pool in this market to try to do something else. As the private equity buyout market is a little mature, there are some people trying to do infrastructure, some people trying to do credit strategies, some people trying to do activism strategies. So I think that there's some spillover effect to other strategies in alternative investment. It's my personal view.
No, I agree with Changhwan. I agree with Changhwan. I think for private equity, we're a little bit past the prime in popularity to young professionals. And I could get a sense of that in the process of hiring. And it may have to do with the economy as well. We're just seeing a lot more diversity in jobs available to young, capable people, which is a good thing. There are so many things that they could do with better work-life balance and not a huge differential in the compensation either, right? All of these tech companies, there's a lot more opportunities out there now with the growth of the economy that's available to young people. And so it's a hard sell, the hours and the hard work.
Last question.
Yeah, sorry. Just wanted to add my 2 cents as I'm very closely working with the Financial Authority of Korea in the law amendments that Changhwan has mentioned. So obviously, the dramatic increase of the retail investor, as you can see in the slide, was really, really powerful. But as you know, the percentage of voting in general election is much, much higher than the percentage of voting ratio in general shareholder meeting, which means that they have the power to change the law to influence the politician. So I would say the Korean capital market law and M&A, maybe Changhwan would not agree with me, but the level of minority shareholder under the statute, the black law, is quite good. So for example, we have preemptive rights for shareholders, which most of the states in the United States don't have. But while the market is still not very active. So we like to compare about the role of the law and the market in corporate governance. So maybe we have a very, very good law thanks to the activities, but in terms of market, it's still very low. So I just wanted to say that law professors are doing their jobs in Korea.
Thank you.
Just your clap before I even asked you to clap, right? Yeah, thank you so much for joining us. And of course, I expect that in the next few years, Korean and Japan's market, capital market, is going to be even more exciting. Right? So those who are doing work in this area, I'm sure there are lots of data that you can do, and we hope to engage you more next time again. All right? So thank you very much. Thank you.